While we have had a catalyst event today that could suggest a market-wide sell-off, I don't think the overall market reaction is as bad as the headlines just yet. The S&P dropped by -0.79%, which is fairly small considering. We're still above the conversion line, and lagging span looks like it wants to close below price. Therefore, we're still expecting a ranging market. Industrials closed at -0.26%, which is less than the SPX. We did get a close below the conversion line though, so we would have to see if we can expect price to come back down to the Kijun line or if it will reclaim this line here. However, there is some ways to go until we get to the target. The equal weighted Russell had almost a negligible day, closing at -0.03%, which indicates there was a sell-off in the larger cap stocks, as the S&P's close was more bearish. The RSP still closed above the conversion line, lagging span is still above price, and we still have some ways to go until we get to the target. The conversion and the baselines seem to be flattening out. The IWM is currently flat, lagging span almost touching price. We'd have to see if it confirms it as support, but for now, price is stuck in between the Kijun and the conversion line. There's no reason to be bearish just yet, but it is worth pointing out that this almost did reach the target. The big story today, however, is in tech, with price closing in the cloud and below the conversion and the baseline. This marks a no trade zone and turbulent times. Anything can happen in the cloud. Lagging span is below price, confirming that this is a ranging market, and we can see a bearish close of -1.9%. Looking at a bit more detail, IGV had a positive day, closing at 0.31%, but it's still within the cloud. The MAGs had a negative day, failing to confirm this line as support. It was really the semiconductors that let the Nasdaq down, closing at -4.77% and almost inside the cloud, and lagging span is below price. The catalyst for the bearishness was SK Hynix, which fell over 15%, which triggered a market-wide trading suspension, as Samsung's market value also dropped below 1 trillion, with both companies now trading at least 30% below the record levels reached last month. They're both a part of the Kospi South Korean index and represent around 42% of the entire index, which now has a bearish close below the neckline and below the cloud, with the target being a further 24% drop for the Kospi, with Samsung dropping despite having a good earnings report fairly recently, which triggered the market-wide sell-off in semiconductors, which we can see in the Nasdaq. The drop clearly had an effect on its peers, such as Micron and WDC. Geopolitical events are still occurring, as you can see here. As a result, we saw oil jump up 8.36% and the XLE jump up 3.01%. However, for both charts, it's purely a catalyst-driven event, as we haven't entered a bull trend just yet, with my ETF screener only showing crude oil and the XOP receiving a bid today. The XOP closed bullish at 4.17%, but still, we are below the diagonal and below the cloud. And while we may or may not get further escalation, the market will likely pivot towards focusing on some of the earnings during this week. My daily screener did not have that many setups today, but from yesterday's video, PSX was highlighted and it had a breakout today, which is highly catalyst driven. VLO also jumped up 5.38% and DINO jumped up 4.65%, with all three being beneficiaries of the oil, gas and energy move today. Resideo Technologies also flagged up on my individual stock screener, and this is my only new addition in terms of the setup. Got a cloud breakout today and has a decent 1-to-1 move here. It's looking like we can fill the gap, however we may stop out a little bit lower because of this volume spike here in the PBR, so set your targets accordingly. It could also stop out at the diagonal resistance there, but it's certainly worth a trade. Lagging span is still below price. We haven't had a bullish twist just yet. If this was of any value to you, please like, comment and share.